Okay, I'll go ahead and get started. So this, good morning, first of all, and welcome to this webinar on EdgeRater Core Templates. And I wanted to do this webinar as a follow-up to the previous one a couple of weekends ago, which was all about the straddle busting template, the new straddle busting template. And this is really just going to be going over some of the more let's say core templates, or templates that the majority of people use. So in EdgeRater, there are a lot of templates, as you know, if you've seen the program, but there are some that are designated as the core templates. And the straddle busting template is now going to be among those because I think that is one of the best bits of information you're going to find. So that's something I use every day, and I've got some really good feedback from that too. So before we get started on that, I should go ahead and just kind of review what happened in the week with the straddle busting, and then we'll get into the other templates. So hopefully everyone has had a chance to play around with this template, and it really does give some good information. So as I said before, a couple of weekends ago, that this template is something that's run with the liquid options symbol list. So that's a list of 163 stocks. So there's backing data on the server that has been compiled for this list. So if you use a different list, a bigger list, it's not going to have all that information in there. But this list should be essentially the list of stocks that you possibly are trading, because it's a really highly liquid list of stocks and ETFs. And if you're trading stocks and ETFs outside of this list, then you are probably trading some more illiquid stocks and options. So that always makes things harder. So I'm just going to run this then for Friday. We'll do a quick review of the week. We'll find out what was the best in terms of busted straddles. And something interesting happened on Friday, in that the number of busted straddles that were over 100% was actually quite high. And the first one on the list is Alibaba. And as you can see on the chart over here, on Friday we had this huge green bar broke through some 5-day, 10-day resistance levels, heading up towards 30-day resistance. And remember, this is not volume, this bar. This is the degree of unexpectedness, if you like. And that was a 367% move in the next expiration straddle. So that's quite huge. So you don't see those kinds of numbers very often. So something definitely going on here. And if you look down this list, you'll see that there are a number of stocks that have large moves too. So Alibaba, of course, pay attention to that coming up. Here's another one, Halliburton. This broke through on Friday 30-day resistance with 330% gain in the straddle, the next expiration straddle. So remember, on Friday, the next expiration is going to be Friday. So this is the idea of taking the Thursday closing price of the Friday straddle, and then finding out what the percentage move in that straddle was between Thursday's close and Friday's close. So there's only 1 day left, essentially, in the expiration when this 330% gain was indicated. But as you see, as you look back through this chart, the other straddle gains were nowhere near this level. The next highest we got was 167% gain, and then it goes down and down. So it's quite an extraordinary move in Halliburton. So again, something else another stock to pay attention to. Then we look at Carvana, had a 300% move, and that actually has had a really huge move before of 600 to 700% back at about a month ago, June the 8th. But again, today or Friday, it did make a big unexpected move, and it broke through 6-month resistance. So this is another one to pay attention to. So it's, and I'll just quickly go through, I won't explain too much about these, but as you go down through here, you can see how this template is able to pick up the stocks that, not necessarily because they had the biggest percentage gains, although in a lot of these cases they are huge percentage gains too in the closing price, but because the amount of unexpected behavior was high, and that could be either on the upside or the downside. It could be a down move in the stock, or it could be an up move in stock. These are all up moves. But there were some in here with large moves with down moves in the stock. So for instance, XLP, this ETF here, had a down move of only 1.1%, and yet the straddle moved 130%. So this is a really useful template and a real go-to template now that is added to the list of EdgeRater templates. How important is it? This is always a good question. So when you see these big unexpected moves, that's something that's already happened, obviously. But so the question then is, what's going to happen in the future? Does it give an indication to future price direction or future volatility? And there's no definitive answer to that, but these are stocks that are moving, and therefore, if you pay attention to them, you can use your trading rules around these stocks at different levels, or if you're looking for breakouts through certain indicators, you can follow those as well. Last weekend, I sent an email which described, this was on Friday, this happened the previous Friday, so a week ago, with some of these straddles, and I noticed that I pointed out that on the Tuesday of that week, so this was the Tuesday after we had the webinar on straddle busting. So this was the, let's see, yeah. So the webinar would have been on the weekend here, and the Tuesday on 6/27 was here. And I sent out an email which basically just pointed out that there was a big move in a number of related stocks. So Carnival was one of them, and then a lot of the airlines too. And so it's always useful to then go back and see, now we have more information since that Tuesday, we can kind of go back and see, well, because the whole group moved at that time, was that indicative of further moves? And so here's what happened with Carnival. By the last Friday, it did have this big unexpected move in the straddle for 313%. And then since then has kind of, and this would be essentially this week, has been in this range up here. And it did create a new 6-month high, but it's not, you can say this is in quite a nice upward sloping direction. So the other stocks that were part of that group were the airlines. So you had stocks like UAL. So if you look back to the Tuesday that I was talking about, that would have been here. So UAL just consolidating. You had DAL, so Delta, and I should always type that in correctly. So Delta, this would have been the Tuesday, this bar here. Since then, it's continued in this up direction, so it hasn't really broken this trend higher. You had Southwest Airlines, so LUV. The Tuesday was 627, was this bar here. So you did continue to get moves for the remaining week and a half, essentially from that Tuesday till Friday. Let's continue to move higher. So that group of stocks was definitely on the move, and that's definitely something that was picked out by this template on that Tuesday. So yeah, so I think it does pay close attention to the stocks that are having unexpected moves. So that's really what I wanted to say about that template. And now let's move on to some of the other core templates. So the first one is, this is just something that people run just to see what's happening in the market. It contains a lot of information in a very compact format, so it's really easy to see and manipulate. And you can run this on, you don't have to have options for this. You don't have to have options data for this to run. This will run on any list of symbols that you have. But then again, a point that a lot of people have made is that you don't just always want to run on the entire list of all available stocks, because a lot of these stocks it's not going to be good to be trading them, because they just don't have the liquidity, and it's always going to, it can be hard to get in and hard to get out of some of those stocks. So sticking with just the liquid stocks is actually pretty good. We can expand it in this case and just choose the list of CBOE weeklies, and that will include the equities and the ETFs. So I'll run it on that list. So this is something you might do when you're first coming into the program. You've got the end of day data, and you just want to take a look at what's been moving over various time periods. And we have the time periods here. We have daily period. And so in this webinar, I'll talk a little bit more about how you can interact with the reports and the charts. So that's a key aspect of the program, and to get everything working smoothly, and so it gives you the best information in the most efficient way. That is important to know. So I'll talk somewhat about that too. So if you are in any template, you will often see a lot of templates will have a row at the top of basically what we call the header row, and it's just a description, obviously, of the data in the columns, and you'll see a drop-down arrow in the header, and that arrow gives you the ability, if you clicked on it, you would have the ability to do filtering within that column, and you can filter in a number of ways. You can also do, by clicking on the arrow, do some sorting, least to greatest or greatest to least. But there's a shortcut to doing sorting, which is just a simple single click in the column itself. So if you click it one time, you're going to sort in one direction. In this way, this particular time, it's going from low to high. So what we would call a reverse sort, this would be called an ascending sort, and then a descending sort would be going from high to low. So so that's just a quick way of doing your sorting, and filtering is useful too if you don't want to see all of this information on one screen, because it may just be making you, you may be seeing just too many stocks here, and it's a little distracting. So you can actually do some filtering. For instance, it's often people like to go into the close column and just say filter from number filter, only look at stocks that are greater than $10. Okay, so then now we're not going to look at those penny stocks at all. So that can be helpful. Okay, so on here we can see that on Friday, the one-day change, you had Carvana, and then you had riots. Again, riot broke out of this range, broke through a 6-month high. You had Rivian, Schlumberger, Beyond Meat. Again, Beyond Meat has just broken through a 30-day high. So, again, something to look out for. So you might think, well, some of these were picked out from the straddle busting template as well, and some the straddle busting template didn't pick out. So what you can do, it's just another way of looking at the data. And I think the straddle busting template gives you information that you wouldn't see using just regular stock market data. So a lot of stock traders who are just using just price data would not see a lot of the things that you're going to see in the straddle busting template. But by just using price data, you will see this. although a lot of traders will not have this information in such a compact and easy to use way. So, it's harder for people to kind of navigate through and see lots of information at once. So what will happen if you have these two reports, this is a good way of organizing any workspace. Once you've got more than one report in the reports viewer, you can arrange them by just dragging the tab. So I can drop this report into the main area with the other one, and it appears as a tabbed report next to the other report, or I can just pick it up and drag it. You can see it splits it from that main tab there, and I can put it at the top or at the bottom. So thereby created a essentially a paned view. So I've got an upper and a lower pane. Now, any report in EdgeRater is when you produce the reports, they are automatically sensitive to each other. So if I select in my lower report here SLB, if I had SLB in the upper report, it would actually come to the top of the list. But remember, I ran this lower report using a much larger list of stocks, whereas the upper 508 you can see there, whereas the upper report only has 163, which is the liquid stocks. So if we did it the other way around, we went to the stocks here, and first of all, I'll just resort it by Friday's data, so we can see BABA first. Okay, so here we see BABA was an 8% gain for the current day. We see that in the good, bad, and ugly report. You can also see that over here in with the C%, that was an 8.6% gain. That's just showing one extra decimal point. That's okay. But the important thing here is that the reports are all linked together. So it's really easy to scroll down through. This time I'm using my keyboard, and I'm just pressing the down arrow on the keyboard to quickly go down through the stocks. You see the chart quickly updates. You see any other report that you have open will also update to show that particular stock at the top. So if you have favorite indicators or favorite styles of trading, for instance, example might be breakouts of squeezes, squeeze stocks that are in squeezes that break out. You can have that report open as well, and then you can go through and see how that stock is behaving with the parameters of the other templates as well. So that's a very useful thing to do. Now, so one-day moves are interesting, obviously, but that's something that's obviously just happened in the day. Does it mean that there's going to be more volatility coming up, or the moves are going to continue? We definitely don't know that. Okay, but you look at weekly moves, then you're starting to look at larger periods of time, and those moves are more sustained. So potentially that carries more information. It's moves over a period of a week. You can also look at them over a period of a month. So with Rivian, you've got this 48% move over 1 month. You've got year to date on here too. And so this template, the good, bad, ugly template, shows multiple timeframes of moves. We've already looked at daily, weekly, monthly, year to date, but then it goes down even further, even more information. So if you just wanted to look at the moves, what stocks moved the most yesterday. So you can click on the -1 on the days section, and that is Thursday's moves sorted by highest to lowest percent, or lowest to highest if I click on it one more time. Okay, so that's always useful, because now you can just go through your list and see on that one-day move on Thursday what then happened on the Friday, i.e. yesterday. So very quick and easy to see that. Or you can do the same for weeks. Let's look at what happened, which stocks had the largest percent gains over the course of not last week, but the prior week. So it was a 36% gain in Overstock. And you can see that this week it has sold off a bit, and you'd if we scroll this over to the left, then you can see that the week move in overstock this week is negative 10%, whereas the prior week it was plus 36%. And the week before that, it was 9%. I hope you can all see this. 9%. The week before that, it was 6%, 5%. So it's had weeks of, and you can see on the chart, it's had weeks of just steadily increasing. And then this template break goes down even further, goes out to the next highest time frame, prior months. And then it goes even further down to prior years, all the way down through the last 10 years. So current year to -9, so 9 years before that. So total of 10 years. So all that information is available in this good, bad, ugly, just to really quickly sort and filter and just see what's moving in any time frame. And this would be a core template for EdgeRater. One of the core templates. Let's take a look at the next one. So seasonality. This is something that does not use any of the options data. It's using stock price historical data to determine over set periods in previous years whether there's been a consistent move in that period. So, for example, if we look at under seasonal analysis, you'll find that template, but the classic one is seasonality by month. So click on seasonality by month, and I'll just run that quickly. Always in the lower left, you'll see the progress bar. So this is the program churning through the data, producing this report. The report is added next to the latest report that we had. So it's already put into this lower pane down here. And so this is something that you can just run to give you an idea of what stocks move in certain months of the year. If there is a seasonal behavior for stocks, not all stocks have seasonal behavior, but there are some seasonal stocks, and you can find those with this template. So if we were looking at, we know we've just started in July, we're already a week into July, but if we were just starting July, you may have run this report at the end of June, and you wanted to find out what stocks are coming up for July. What's the moves that are happening for July? Okay. The way this is sorted out, the way this is organized, is it's done over the prior 10 years, or however many years of data you have in your list. So this is an important thing to remember. When you're running a template against a list of stocks, that list can have any amount of data. It just depends on the configuration that you have. The way to find out how much data is in a particular list is to click on the Edit Symbol List button, and that will show in the Data Snapshot tab, it'll show the from date and the to date of every stock in that list. This is the backing data for those stocks. So here you can see we have data from 7/8/2013 to 7/7/2023. So there's 10 years of data in here. We also, not every stock has 10 years of data, obviously, because some of these stocks are newer, weren't introduced until later. And so whatever the earliest date is for that stock, that will be listed in here too. The other tab in here that's useful is the data update options, where it actually tells you how much data it's going to fetch for this list whenever you do a data update. But you can also change this. So if you wanted to do a seasonal report over only the last 5 years, you could set this down to 5 years, refresh the data, and then get 5 years of data. Then when you run the template against that list, you're just looking at that 5 years of data. So it's a nice isolation, rather than going to a central database somewhere containing all stocks for the whole history of the stock. You can isolate that data to produce just what you want and just the time period that you're interested in. And if X number of years was no good for you, you can actually choose a specific date, and you can say, a starting date and an ending date for this list. Press run, and when you press run, it will just fetch data for that date. Okay, so having said that, the terminology that we use in EdgeRater is that the list of symbols here it's a text file essentially, and it's called just a symbol list. But there is a snapshot of data backing every single list, and that is we call it the snapshot, funny enough. So yeah, so you're running a template against the snapshot. So I ran this template against 10 years of CBOE weeklies, and it's produced for me this report. And for July, let's say, over the last 10 years, it's going to give me an average of the move in each of the stocks. So, it takes the July of 2022. It says, what was the move in July of 22? What was the move in July of 21? What was the move in July of 20? And so on. And it gives you an average. But then it also tells you out of those 10 years, in our case, 10 years, how many of those years were up years, did the price move higher, and how many years did the price move lower? So for stocks that have a seasonal bias, you would expect the moves to be more numerous in there. If you're looking for an up seasonal bias, in the up direction, there'd be more up years essentially. And so it's good to sort by the up if you're looking for up moves. And here you'll see FISV. Okay, so in July, FISV over the prior, it's only got 9 years of data for FISV, but over the prior 9 years, it's had an average of 6% higher for July. Okay, and as we go down through the list, MasterCard here on average goes higher by 4%. Abbott Labs goes higher by 4%. So these are stocks that over the past 10 years have had a seasonality about them for July. So, you can couple that with other trading techniques for looking for breakouts, breakdowns, whatever you're looking for in your trading plan. You can just add this as an extra piece of information to help you or decide on trades if you're looking for tiebreakers, essentially. Yeah, so if you had two stocks that met your criteria and you weren't sure which one you wanted to trade, then this can be a great tiebreaker. You can say, well, actually, Costco has a great seasonality in July, so I'll go for Costco instead of say Disney. Although Disney also has, I think I just saw that. Yeah, Disney down here also has great moves in July. So, but there are other stocks that don't. So you could go down and say, I'll choose Disney or Costco over. We can sort by the downs and we can find what's not good in July. Yeah, so yeah, over Mankind. Okay, Mankind average of 15% down in July. So we'll choose Disney over Mankind. You could say something like that. So that's seasonality by month. But there's another, so that's great if you're looking, say, at the beginning of the year, or at the beginning of a month, you want to get the seasonality for the month. But there's another template which is more useful if you have not, if you're partway through a month, you can use seasonality now. And so I'll run that. Seasonality now gives the same style of output. Okay, average up and down. But this time it's not taking month by month. It's taking from whatever the last day is in your data that you have in your symbol list, and it's going back 10 years, but looking at the upcoming 2 weeks for this first set of columns here: 1 month, 2 months, 3 months, 4 months, 5 months, and 6 months. So this is really more immediate. So for seasonality, starting from this date, 7th of July for the next 2 weeks. What is the seasonality? What has great seasonality? And here we can see that, well, actually Morgan Stanley has great seasonality. So Morgan Stanley right now is down at a low, a 5-day low, a 10-day low, and you can see where the 6-month low is down here. But it actually has good seasonality in for the next 2 weeks. So you could add that to your set of information that you know about Morgan Stanley. Meta also has good seasonality at this time of year for the next 2 weeks with an average of 5%. And we all know that Meta's just released their new Threads app, which is taking on Twitter. So you can sort of put all this information together. But you see Meta has really just been going up, and since we'll say since November, essentially. But it has good seasonality for the next 2 weeks as well. So not a bad trade if you're looking for something that's already in a trend that has the potential to go even further. Well, we know that, yes, in the next 2 weeks, it does have the potential to go higher. And we also know that in the last 2 days, it has pulled back a little bit. Probably a sell the news type deal. After the news was released about Threads, actually you had a bit of a sell-off. Okay, so you can go through there and look at those. With your sorting and filtering, you could, instead of just sorting and clicking on these headers, you could just say, I'm really interested in stocks that have either 10, 9, or 8 up years out of the last 10 years. And now instead of it just sorting those stocks, it's actually filtered the list. So I'm never going to see, when I'm clicking around in this report, I'm never going to see anything other than really great stocks for the next 2 weeks. So that's useful too. So that you can do some random picking around, and you're always looking at great seasonal stocks. Okay, seasonality, really, really useful. What else do we have? So we've looked at good, bad, ugly. Well, straddle busters, good, bad, and ugly. We looked at seasonality. Another template that is really a hidden gem in the program is the linear regression standard deviation channel analysis. So I'll run this against my list of CBOE weeklies. And okay, let's put it down here. So I'll just put this up in the top area, and what I'll close these ones down just so we can see more. If you ever want to close a report, you click on the X button, and then you can choose to save. If you've made changes, like you've been clicking around in the filtering or the sorting, and you want to save that, then each one of these reports is backed by an Excel file on your file system. And that's why it's saying, do you want to save the changes? Because it will save it back into that Excel file so that when you open it up next time, either through EdgeRater or through Excel, you will have the state that you saved it in with the correct sorting and filtering. But for now, I'm just going to say, no, I'm not interested in that. Okay, so linear regression standard deviation channel analysis. Again, so sometimes this is we're looking at a lot of data here, and it can be overwhelming to start with. You see there's so much information here, but it's very straightforward when you break it down and isolate it into the constituent parts. Okay, all of these reports so far, I think you've seen, they're all just listed 1 row per stock, and that's the same in this report too. They all have another common thing, which is the header row and these drop downs. But this report now is grouped into groups of 4 columns. You have a 5-day column, a 10-day column, a 21-day column, 63-day column, which is 3 months, and then you've got 6 months, 9 months, and 12 months. So 252 trading days is basically 1 calendar year. And then anything after that, we're not even interested in. This is just data that had to be generated in order to produce these columns over here. So linear regressions, if a stock is moving higher or lower, however it's moving, it will have, there's a channel you can draw over a certain number of periods. So for instance, 21 days, okay? If you look at the chart here, you can see that a linear regression line has been drawn for the past 21 days in this stock. I just picked a random stock here, PSFE. And in addition, there's been standard deviation bands drawn around this linear regression line. Okay. Now this line has got some characteristics, right? How is it sloping? Is it sloping up? Is it sloping down? Are the bands around it, those standard deviation bands, are they narrow or are they wide? You can imagine that narrow bands indicate a tight, consistent move, and wider bands would indicate more volatility. Okay. This report allows you to filter stocks to just stocks that are having consistent moves in one direction or another over these timeframes that I've listed here. So let's take a look at a 1 month time frame. And we'll first of all sort by annualized percent. That's the amount or the speed that the stock is rising. The linear regression line is rising. What it's saying is, if in a 1 year's, because it's annualized percent, in 1 year's time, if the line was to continue in its current trajectory, where would price be? Where would the end of the line be? And for skills, the end of the line would be at 1,479%. We look at the chart and we can see why that is. Okay, there is a gap here, and this potentially could be, this is either a buyout condition, and I don't know, and this is why you always have to look at the chart and do a little bit more research. It could be a buyout. It could actually be that the backing data is not taking into account a split that could have happened in the stock. And sometimes the providers of the data, even though they do their hardest, try their hardest to incorporate all splits into the database, sometimes they miss some splits. And so you see big jumps like this. So it could be one of those two things. So you could always check, double check. But we always go down and look for things that are more reasonable looking. So here you have Hut 8 mining core. Okay, that's making a nice move over the last 1 month. Okay, nice move. A measure of the width of this channel here is the column Q here, bandwidth. So if it's got a low value in bandwidth, it means the move is consistent. It's a narrow move. Price is moving up in a very consistent manner. If it has a high value, like in skills, we already saw that. You know, the band is wide. That's inconsistent. So we can kind of see that already from the template without looking at the chart. And the other important column here is percent B. And this is taken really from Bollinger Bands. The terminology is taken from Bollinger Bands, but it's really where price is in relation to these bands, the upper and lower standard deviation channel. Where is price in relation to that? So if you're at 60, so let's take an example of negative 5%. That's a good one, because that means that the price is right just below 5% below the lower band. And you can see that on the chart here. You could find a 100%, you'll see it's right at the upper band. So let's sort by percent B, and we'll find 100% right here. So yeah, price is right at the upper band. So how can you use this with all the filtering capabilities to really hone it in on something that's having a consistent move in an up direction with, and it's, let's say it's at the lower band, and the implication there being that it might find support at that lower band. Okay, so what we can do is we can sort by annualized percent. You could even filter, and I often like to do filtering here and say, I'm only going to look at stocks where the annualized percent is greater than 100%. So I filter that. So I've now got a much smaller list. Direction is up in all of these, obviously, because the analyzed percent is higher. I'm going to also look for where the bandwidth is low. So I'm going to do a filter based on bandwidth. So I'm going to say bandwidth is less than 0.2. Okay, so we're moving up, bandwidth less than 0.2, and now I can sort by %B. Where is price in relation to those bands? And so now I have a really great list of stocks that are in nice uptrending, low volatility channels, linear regression channels, and I know exactly where price is currently in relation to those channels. And I know the bandwidth too. So I can just go down through this list and immediately see if there's anything of interest down here. So all of these will fit my criteria, all the criteria that I just put in here. Okay, so these are all looking, the ones at the top of this list, they're obviously looking for where price is at the lower end of this channel. I could look for price where price is at the upper end of the channel or above the upper channel. So then I just sorted by %B. So now I'm going down the other way, looking where price is actually towards the upper end of the channel. You may have your preferences on that. As traders, you may prefer to trade things where there's been some kind of sell-off. Prices come down to a lower end of the channel, and you're looking for a rebound into the direction of the channel, into the direction of the linear regression line, or you may be on the other side and just looking for where price is continuing to go higher, with the expectation that it will continue to go higher. So either of those is a valid way of trading if you have your stops and your entries and your stops in place. But this is a great way of just finding the stocks that are meeting your criteria. Now I'll talk a little bit about so we've just been looking at the 1 month column here. Maybe that's a little too, it's not enough of a period in order to say that there's definitely a move in place. So let's go to the 3. I mean, it could be, just depends on your time frame for trading. But let's go to the 3 month column and take a look at that. Before we do that, we have to remember we've already done some filtering on the 1 month column, so we can go in and just clear that filter. There's 2 filters. You can tell because the filter column has this little filter icon by it. So we can just drop that down and clear that filter. Okay. And now we can go to the six month column and do a similar thing, just looking for a high annualized growth in the linear regression line over, sorry, not 6 months, 3 months, 63 days. Okay. I'm going to again restrict it to 100. So I'm going to look for greater than 100% annualized. I'm going to look for bandwidth being quite low. This time I'll just sort by bandwidth. Okay. And that meets the criteria. And then the %B column is just telling me where price currently is in relation to those, in relation to the standard deviation bands around the linear regression line. Okay, so you have Amazon. A nice 3 month move has been occurring in Amazon. Toll Brothers, so home building. Okay, is everyone aware that Toll Brothers is making this move? If you're not aware, this is how you find out that information in a very easy to use report. Meta, again, has appeared several times on our research. United Airlines, again, that's something else I picked out down on that Tuesday when it broke out with unexpected moves with all the other airlines and also cruise lines. So the trade desk, NU, Royal Caribbean. So RCL. Okay, before we were looking at Caribbean cruise line, CCL, but RCL also. So all those stocks are in uptrends. That's it's two separate industries really. It's airlines industries and cruise lines industries, but they are related obviously with regard to tourism. Okay, so you can just go through and see down there. So this is a very powerful template, and it's one of the favorites of EdgeRater users. I get comments about this all the time, how this is finding great trades for people. So definitely one to use regularly. Okay. Now we'll get on to some templates. So squeeze template. This is something that when I worked a lot with George Lee, he was very much into the squeeze. And so I wrote this template for George and George's followers. And George, as I said here, he focuses on stocks that are breaking out from low volatility bases with unusual volume signatures. He also looks for when the squeeze is on. So when the Bollinger Bands are inside the Keltner channels, once you're in that squeeze, he then looks for breakouts or breakdowns. So the types of breakouts that he looked for were MOBO breakouts, PSAR breakouts, pocket pivot breakouts, and Keltner channel breakouts. Okay, so I'm just going to run this on, again, this list of CBOE weeklies. And also the squeeze, for those who know Dave McMullen, he also is really likes this template and the whole squeeze. I think he mainly uses the weekly squeeze template, but we'll see that in a second. But yes, he really likes this one too. So you may have noticed that every time I run a template, my chart layout gets updated. So this time, the indicators that I've got on the chart are indicators relating to this template. And how that works is that the template, whenever somebody writes a template, anyone can write a template. Mainly so far, it's been EdgeRater, and we've been writing templates, and we configure in particular layouts that we think are appropriate for a technique. Okay, so in this case, the chart layouts the chart layouts worksheet of the workbook for the report has been configured with a squeeze overlay and some other indicators. But that's how we configure it. It's a separate worksheet within the report. And then if you have your chart set up to link to the template layout, this button here, it will actually change the layout whenever you look at the chart. So to show that in action, if I go back to the linear regression report, I'm going to click on APT here. Oh, okay. First of all, I'm going to remove my filter from here. And now I'm going to click on APT. Okay. So now the linear regression template has updated to bring APT to the top of the list. If I clicked on the linear regression template now, you see the chart layout has changed now to show the linear regression. And because in the linear regression template, I've clicked on the 1 month set of columns, it's showing me the 1 month linear regression line. If I'm clicking on the 3 month linear regression line, it's showing me the 3 month line. If I'm clicking on the 6 month set of columns, it's showing me the 6 month line. So it's what I'm trying to say here is just that the chart is sensitive to where you're clicking in your templates. Now, if I go back down to the daily squeeze and click anywhere in the daily squeeze, it's changed over now to a squeeze layout. If I didn't want that behavior, because sometimes you have your own favorite chart layouts, for instance, my favorite layout now might be, I could have created my own, of course. And when I'm looking at layouts, if you have your own layouts, they'll be listed in here. I haven't got any special layouts on this computer. But for instance, let's say that my favorite layout was the in-play layout, just as an example. And I always, whatever I'm doing in my templates, I just always want to see this layout with these indicators. Well, if I turn off link to template layout, I can click on any of these rows now in any of these reports, and the chart layout does not change to the template defined layout. Okay, so it's not, so I'm just able to see the chart the way that I like to see the chart. But if you just want the chart to be sensitive to whatever report you've run, you can just click on that. And if you prefer a report to have a different layout associated with it, that is also possible. You just have to go into the file system to change the template. And you do that using Excel, actually. It's quite straightforward. But mostly people don't do that. And they use the defaults, or they use their own layout and not have it sensitive to the template layouts. Okay, so let's get back to Squeeze and what Squeeze is all about. Okay, so Squeeze is Bollinger Bands inside Keltner channels. So when you run this report, let me close down the others so we can see this in large. Okay, so Squeeze report. If Bollinger Bands are inside Keltner channels, then Squeeze will have a yes. So all of these are in a squeeze, but then the length of the squeeze, how long has the stock been in a squeeze? How long have the Bollinger Bands been inside the Keltner channels, indicated here in the length column? So that when it's just been inside 1 day, it's not really that long. It's, technically it's in a squeeze, but it's the duration of the squeeze has a lot to do with moves out of the squeeze. So for instance, here, this is a stock that's been in a squeeze for 18 days. And you can see that the chart that's associated with this template has got the salmon colored bars here. It's got, Keltner channel and Bollinger Bands here. Whenever the Bollinger Bands are inside the Keltner channels, is colored in this salmon color. And you can see that's been going on for 18 days. Okay, what else can I see from here? I can see that, well, the chart has got the PSAR, the PSAR, parabolic stop and reverse, which is used by a number of traders. That's a great indicator. What you're looking for, these are the dots that you see if you can look up closely on this chart. These are the dots that appear above or below price. And what you're looking for is a flip of these dots. So if dots are below price, then you're waiting for price to come down below the dot, and it will flip the dot to be above price. That's the flip is an indication if there's a PSAR flip. Okay. So one thing we have here is a custom sort. Custom sort 1 is the default. So everything that has yes in custom sort 1, and that does include ET, is something that's in a squeeze where it's close, within 2%, prices are within 2% of the PSAR, meaning that this is going to go on your watch list, because if there's a PSAR flip, that's a significant event and a potential trade entry. So everything here with the yes is potential trade entry, but you might only be interested in stocks that have been in a squeeze for a certain number of days, indicated by the length down here. Okay. The other sort, custom sort 2, is for the opposite side of the squeeze. So this is where the first one was where the PSAR was above, and now sort number 2 is where PSAR is below, and this is within 2% of the lower PSAR. So for instance, down here, Burlington Stores is within 2% of the PSAR. I mean, quite easy for that to generate a PSAR flip on Monday. It could indicate an entry, short side entry. You know, obviously, if you were to do that, you have a trading plan that you're going to follow with following that with your entry stops and your stop losses, etc., etc. Position sizing, all of that good stuff. But this just gives you an idea of, you know, you can run this the night before. You can find your list of stocks potentially to watch for the following day. You have your trading plan for the following day. You go ahead and implement that plan in the day, and there you go. Okay. So the other thing that's indicated in here, so we already talked about these stocks are in a squeeze. How close are they to their PSAR? Then we've got breakouts within the squeeze, and there are certain breakouts. If the PSAR flip has already occurred, then you'll get a PSAR breakout within a squeeze. When you're sorting on the column, the custom sort columns, the PSAR flip has not yet occurred. It's close. It's close to happening. If the PSAR flip has occurred, we can sort by the S column here. So here is an example where on Friday, the PSAR flip occurred in DT. Okay, it's in a squeeze, PSAR flip occurred. No other breakouts occurred, just that PSAR flip. That could be something part of your trading plan. EXPR, again, had a PSAR flip on Friday, also had a MOBO breakout. MOBO are these modified Bollinger Bands, which is the blue area in the middle here. And then you can come down further. You've got MPC, which was in a 3-day squeeze. Had a PSAR flip, MOBO flip, and pocket pivot breakout. All right, and that's for breakouts. Breakout meaning that price moving in the upper direction, and then that same set of columns for price moving in the lower direction too. So you can say PSAR flip on the downside. And here are the stocks that meet that criteria: AT&T, Kimberly-Clark, Tilray, and Tractor Supply, TSCO. Okay, so I think so. The weekly squeeze is essentially the same, and I think this is just the last thing we'll see for now. The weekly squeeze is the same as the daily squeeze, except that now instead of looking at a daily time frame, we're looking at the weekly time frame. We have to flip the chart over to be weekly chart. It shows exactly the same information, but for that weekly time frame. So looking for here we can see Robin Hood. Okay, it's been in a 65-week squeeze, essentially quite a long squeeze. And it doesn't have any weekly breakouts as indicated here, but it is close to this upper PSAR. So it's looking for a PSAR flip. If that flips on Monday or next week, you will get a PSAR indication in here. So, you know, that's an interesting one, right? That's a stock that's a former high flyer. Everyone's trading their small accounts. It became very popular. And obviously couldn't sustain the move that it had up here up to 85 and has sold off down to $9 or $10, entered the squeeze somewhere around here, and has just been squeezing. So volatility has been getting smaller and smaller. The price is staying in more of a defined range, but now is there a chance that it's going to break out of this range? That's what this template is trying to point to, things that have that potential. Is it going to go on to go back to former glory, or is it just going to whimper and die further? But these are things that are in play, essentially. Although I shouldn't say the word in play, because that is another template that we can look at another time. But it's just trying to highlight things depending on your particular taste for trading. So I hope that all makes sense. If you have any questions, I'll take questions now. And I think, yeah, that's all I want to show today. There's a number here that I was going to show, but if you have the program, or if you've got a trial of the software, you can easily go down through and look at the descriptions for these. and try them out for yourself. But for anyone who's new to the software and needs to get up to date, figure out how things work, I think this webinar would be a great place to start and find out how all the reports link together, how the charts work, and that kind of thing. So hopefully that's been useful. If you have any questions, I'll definitely take questions now. Let me see if I can see and chat. Okay, good. Yeah, so that's cool. I'll post this tomorrow online, send you a link to the video if you need to review. And thanks for attending. Have a great rest of your weekend. And see you all again soon. Thanks a lot.